We want you to plan for success. Welcome to Planning Matters Radio.
Hello and welcome in. I am Peter Rashan. This is Planning Matters Radio, brought to you by Rashan Planning. You can find us online at richonplanning.com. Is my last name, RashanPlanning.com. It looks like richonplanning.com. And we are here to talk about your money, your investments, your plan for your future, your retirement, and everything that goes into that, which, of course, is a lot. I think that the economic world, the financial world dominates a lot of the news headlines day to day. However, I also feel like we focus on a lot of the wrong things. And today we are going to talk about what we can and what we cannot control. So welcome into the program. Glad you're here. And I hope that you stay tuned in. We got a lot of resources that are available for you. If you would like a complimentary review, consultation, if you would like to get your optimized retirement plan put together, if you'd like a copy of my book, Understanding Your Investment Options, if you'd like one of our reports, recently we've covered the 12 questions to know if you are ready to retire. How prepared are you? We've talked about the 10 steps to prepare for retirement. We've talked about the 8 moments to move your money. We've talked about the 5 planning mistakes to avoid, the 7 common financial myths. There are a bunch of others. If you'd like any of those reports, I think that they are helpful for any planner, saver, investor to take a look at, to get a better handle on your money and understanding what you can and cannot control, which today, again, that will be the theme. If you'd like any of those resources, again, the plan, the optimized retirement plan, that's personal, that's customized, that's specific to your situation, going over where you are, what your goals are, where you want to be in the future, and then recommendations, step-by-step outlined of what you need to do in order to achieve those goals. Just pick up the phone, give us a call. 919-300-5886, 919-300-5886, 919-300-5886. I'm not only just the voice on the radio or the face on the podcast. I will meet with you personally. Myself, Peter Rashan, will meet with you if you've got a question. We'll speak to you if you want to address an issue just quickly over the phone. Feel free to give Rashan Planning a call, 919-300-5886, which is a little different. So I hear from some of the other financial advisors that are on the radio. So again, just a time to personally speak with me, and would love to hear from you and help you in any way we can. Give us a call, 919-300-5886. I would be remiss if I did not mention that it is Memorial Day weekend here, and we honor those that have honored this country by giving the ultimate sacrifice, and their families, their loved ones. Thank you very much. Thank you to those who have served and fallen and given that sacrifice. Thank you so much to the families of those who have made that sacrifice. It means a lot, and we want to honor your memory. Happy Memorial Day, everyone. And I know this is a lot about cookouts and travel and vacations, but that's what this holiday is really all about. And I, despite the problems that we have and that we hear about, love this country, think that this is the best place in the world for any of us and all of us to be. And I think that we've got ways to solve some of our problems because of the sacrifice of those that have fallen so bravely. So thank you very much. Happy Memorial Day weekend. Give at least a moment's recognition to the purpose of this holiday. So when we pay tribute to those, and this is also kind of the unofficial start of summer. Summer is generally more carefree time of year. We might actually be able to enjoy a more typical summer this year. Things seem to be getting back into a normal routine, and it's not time to put your planning or your finances on hold or on the back burner. Life and money continues to move. So let's talk about the areas that we can work to control different aspects of our financial outcome and the steps to increase our control over them. Stay tuned. As always, lots of important information coming your way. So what we can control and what can we not control? So much of our outcome is determined by the amount of control we have over certain variables. And yet much of the financial world seems to focus on what is out of our control. Let's take a look at some of those variables and what we can control, what we cannot. What we cannot control. We cannot control the market. We cannot control Washington. Yes, we can cast our vote and hope that it matters. But once those folks are up there, we generally have very little control over what they are doing. We cannot control interest rates. We cannot control inflation. We cannot control emergencies. We cannot control international conflicts. And these are the things that we most often hear about in the news cycle. Why is that? Why is so much time spent on things that we cannot control? Well, they're there to generate an audience. They're there to generate headlines. And when we feel out of control, that's when people worry. That drives viewership. That drives interest. You can't drive by a train wreck without staring at it kind of thing. And the news media is very good at that. They know that. And so they tend to focus much more on those things that we cannot control because it drives an emotional response. And they spend very little time educating us on the things that we can control. Because if we can control it, it's not so much of an emotional response, it's an education, and we will go out and act on it rather than staying tuned to see what's going to happen, what's going to unfold next. So how much and how quickly we can affect these things, regardless of the planning we have done, that is what they tend to focus on, the things that we cannot control. But what we can control is where we place our money. If we run a budget, how much we spend beyond our budget, the amount of market risk we choose to expose our assets to, how we position assets to transition into retirement, the old 401k accounts, where are those? Are we paying attention to them? We can take control over those. How our tax plan for retirement is set up. Yeah, we're hearing a lot about taxes, and no, we cannot control the tax environment, but we can control how we set our money up to be taxed. We can control when we begin to collect Social Security and how to get the most out of it. Yet, again, most Americans spend very little time being educated, becoming educated, getting education on those things that are of importance to their specific individual financial situation. And it's said that there's very little financial education offered to Americans, but the available sources are everywhere for those that seek it. And so the benefit of spending more time focusing on those elements that are within our control is that we can better determine our outcome. Again, a lot of variables are going to affect us throughout our financial future. And I wrote a newsletter at the beginning of this year. As I do every month for my clients, we send out a monthly newsletter that talks about what their individual performance has been, what we are paying attention to in the market, the trends that we are paying attention to, what proactive moves we would suggest are made because of those. If you're not getting that kind of communication on a regular basis from your source of financial advice and would like a little bit of additional education, feel free to be in touch, sign up for our monthly newsletter. Be happy to get you on the list to receive that. Again, to sign up, just give us a call, 919-300-5886, or you can go online, richonplanning.com or seanplanning.com, and just request the book, Understanding Your Investment Options. When it pops up, it's kind of the first thing that you see when you hit the website, and we'll also add you to the email newsletter list. But I wrote this newsletter at the beginning of the year, and I said, hey, there's really 4 big factors that I expect to kind of be the news stories that dominate this year financially, economically. And one is taxes. We're certainly seeing that. Inflation, we're seeing that. Low interest rates, continued low interest rates. Yeah, they're still pretty low. And market volatility. And so far, we've really seen all of those except for market volatility. I hope it stays that way, but I personally don't have control over what direction the market takes. And depending on what kind of assets you're invested in, the market can have been pretty volatile this year. I mean, just recently, this past week, Bitcoin, if you're invested in cryptocurrencies, if that's something that you do, it lost almost half of its value. And so, there is volatility out there, even though the market on whole, I will say, thankfully, has held pretty steady so far this year. But those 4 things really are all of them beyond our control. So what steps can we take? Well, we need to know what money does and does not do for us. In order to take steps to better control it, we need to understand that money can really only do 4 things. It can grow, it can be safe, it can be liquid, it can provide an income. Those are the 4 things that money can do. The problem is that money is a terrible multitasker, And it really can only do 2 of those in any one place. And that's why diversification is important. So money in the bank, in a checking account, in a savings account, in a money market, that's about being safe and that's about being liquid. You know the dollars are going to be there when you need to go get them, and you can get them when you need to. Safety and liquidity. Safe, it's liquid, you can get them out with no penalty, and you know that they're going to be there without losing value unless you take that money out. Well, that's not the point of money in the market. Money in the market, the point is growth, but we don't have that safety. We're taking risk. The money that we invest in the market can lose value without us having taken anything out. There can be less dollars there. And if you try to take an income from a fluctuating source, it is inherently difficult to be dependable, to rely on a steady stream of income from something that can go up or down on a daily basis, on a minute by minute basis. However, if I do have a dog stock or a mutual fund I don't like, generally I can sell out of it within 24 to 48 hours, get out. So generally liquid, but only what is in that account at the end of the trading day is liquid to me. Money in CDs, money in real estate, money in annuities, money in bonds. Generally, these are more about conservative growth. So some element of safety and some element of growth, or at a certain point in time, you can trade that growth for an income. And all of them have varying degrees that I just mentioned. All of them have varying degrees of whether they are on the safer side or whether they can provide more growth or more income. And those are the risks that we have to balance and understand in order to evaluate what options to choose. So again, money does 4 things: grows, it can be safe, it can be liquid, it can provide an income, but any one investment only can do 2 of those. Pick which 2 are important. And you should do that based on the qualities that you need, you expect, your goals are for those dollars. And when it comes down to it, we either spend it or leave it behind, right? When we spend our money on many things. We define our goals. Typically, we have a better understanding of the and knowledge of the places where our money would go. But what money does not do, it does not provide happiness or contentment. Not having money does not provide happiness nor contentment either. So, maybe it helps, but just because somebody has a pile of money, they are wealthy beyond belief, doesn't make them happy necessarily. And just because somebody doesn't have money doesn't make them unhappy. So do we find that somebody with more money worries about it less? No, actually it's kind of the opposite. Somebody with more money tends to worry about it more. Now, I used to find that I worried about money a great deal. Every day I'd spend some time worrying about money until I formulated some systems, some processes, and some plans, and dedicated a small piece of my time to focus all that worrying into. So instead of worrying every day with every dollar that I'm spending, all the time having the money on the back of my mind, dedicating a half hour to an hour a month to think about the budget, to think about the income, to think about the spending, and packing it into that time to formulate a plan for the month ahead, having a plan for the years ahead. And suddenly I find that I am much less consumed with my worry about money. And that's what the planning process is really all about. That's what having that optimized retirement plan really should mean for you, is that you have sat down and you have focused some time and attention on the concerns that you have for your money. You have formulated plans for how to handle your money and how to handle these variables that are outside of our control. What is my approach to those to better protect myself from them, or what level of exposure to them do I choose to take? And that's what the planning process is really all about. And if you'd like help with that, if you would like to have the guidance and perspective of a team of qualified professionals that have been doing this, pick up the phone, give a call. And again, you'll meet with me, Peter Rashan. You'll speak with me, Peter Rashan. I'll help you formulate those plans. I've got a team behind me that helps me to manage funds. I've got access to basically the spectrum of the financial world. And if you would like to get that plan put together, I do offer to do that with you, for anyone who's serious about their planning and their financial future, with no cost and no obligation, free of charge. Similar plans can easily go upwards of $1,000 to several thousands of dollars. but we don't want to make cost an objection that gets in the middle between you and actually having a plan. So give us a call, 919-300-5886, 919-300-5886. So what can we control that most plans or planners actually don't address? What are those overlooked items? Well, taxes. A lot of people, and by no fault of their own, we've been taught to handle our money this way. A lot of savers, a lot of investors, even those doing a good job of getting money into savings and investments for their financial future. And if you're taking that step alone, kudos to you. Fantastic. A pat on the back. But we've been taught to defer and delay paying our taxes. And it's really time to rethink that. Because if you are deferring and delaying paying your taxes today, you're kicking that can down the road. The IRS does not forget about those dollars. And the IRS wants your account to grow the same way that you want your account to grow. Think about this. If over the course of 10 years, you save $10,000 a year, so you have saved $100,000. But over that 10 years, you've had growth on that account and that money has doubled. You've got $200,000 at the end of that 10 years in that account. And you deferred and delayed paying tax on it. How much are you going to pay tax on? You're going to pay tax on the $200,000 as you pull it out, when you could have paid tax on the $100,000 putting it in. Now, back in the 80s, as the 401k was becoming the most widely used retirement vehicle that we have available, we were told that taxes will be lower in retirement. And taxes since that time have come down. So that was probably the right advice at that time. But looking at it today, if we are saving on an ongoing basis today, or if we already have built up a large tax deferred account balance and we're wondering how to manage taxation on that, continuing to kick that can down the road, continuing to grow that account without going ahead and at least looking at the tax liability of it is probably a mistake. I call it the gross planning mistake. We get to retirement and I've got $1 million in my 401k. No, you don't. You've maybe got 650 to 750,000, depending on how you pull that out. We can't plan on gross numbers. And again, as the account value grows, which is probably your goal with that, the tax bill grows with it. Remember, if we invested that $100,000, let's say that we were in the round numbers here, just using round numbers, we were in the 25% tax bracket. Well, that would mean that we would have paid about $33,000 in taxes over that time, because in order to save $100,000, if we were in a 25% tax bracket and paid that first, we would have had to have earned $133,000. So we pay that 25%, that's $33,000. Well, the account grew to $200,000. So now let's say we drop tax brackets, as we have been told. We drop tax brackets and we're in the 20% tax bracket. So as we pull out every $50,000, we only get to keep 40,000 of that. 10,000 of it, 20%, goes to taxes. Well, out of $200,000, we can pull 50,000 out 4 times. We pay 10,000 each time. So that's $40,000 in taxes that we pay out of our nest egg for the 33,000 that we saved in taxes to put that money away. So that's the difference between tax deferral and the traditional 401k or the traditional IRA and prepaying your taxes, doing proactive tax management, controlling what we can, utilizing the ability to pay taxes now and be done with them forever in the Roth 401k or the Roth IRA, something that we can control. And yet most people don't receive the kind of education, have not been told about that, have not learned about that. And really through no fault of our own, we've actually been taught the opposite. Albert Einstein said the most powerful force on the planet is the power of compounding interest. This is from the guy that helped to develop nuclear weapons. The most powerful force is the power of compounding interest. And I think that when he said that, the IRS said, hey, this guy's on to something. He's right. We should allow people to defer and delay paying their taxes in their retirement accounts, because that power will work in our favor, the IRS's favor. Well, do we want that necessarily these days? Your 401k, it is something that you can control, especially if you've got old ones laying around. If you're 59 and a half, you've got the opportunity to take control of that. If you decided what options to invest in 5 years ago and haven't looked at it since, maybe it's worth dusting that off and reviewing that with a professional. That's something that we do with savers and investors all the time, is help them take a look at their 401k options and make sure that they're making informed decisions or utilizing options that are appropriate and staying balanced for their timeline. You know, what options you chose when you were 25 or 35 might not be the right options for you at 45 or 55. Certainly not on the doorstep of retirement. It is not something that you want to take the same kind of risk as you may once have been taking. So again, apologize for that. The phone going off. Need to silence that always, right? If we're doing these kind of shows. But anyway, you need to understand the options that you have with your 401k, your budget, another area that you can control. And a lot of people don't. And I spoke earlier that I used to have a lot of concern with money, or a lot more than I do now. And a lot of it was just not identifying where the money was coming in and where the money was going out, and understanding the budget. And people don't like the term budget. I get it. It feels very limiting. So how about this spending plan? Do you have a spending plan? The spending plan allows you to spend with freedom, but it also controls that spending. Make sure that you are doing it in a rational, thought through type of way. And so what we help our clients set up for retirement, so that they feel more confident that they have controlled those areas that they can control and that they're doing things in a reasonable, rational way, is a spending plan for retirement. That's part of the optimized retirement plan. We help optimize Social Security streams of income. We help optimize pension streams of income. We help optimize the account withdrawal rate, the cash flow that your retirement savings can generate for you. We help optimize that. We help minimize the taxes that you're paying, the risks that you're taking, the fees that you're paying, to keep more of your money working for you, and part of that spending plan available for you to spend with confidence. How much we save, that's something that we can control. All of these, again, are aspects that we help to address in that optimized retirement plan. And if you'd like to get that optimized retirement plan, a snapshot of where you are currently, a discussion of your goals, writing those down, documenting them so that you can work to achieve them, and then a timeline of executable action items, step-by-step instructions that you can follow in order to increase the odds and the likelihood that you achieve those goals, pick up the phone, give us a call. Love to hear from you. 919-300-5886. 919-300-5886. And sometimes, it's a lot of little things. Sometimes it's something big. Sometimes we see something that just obviously, hey, we need to do something different. This is not working, or it's going to lead you into a direction that is not going to be the best. But sometimes it's a lot of little things. If we can help identify those and maybe allocate a little bit differently, maybe increase the contributions to the 401k by 1 or 2%, and it gives you a different trajectory. Maybe you're in an expensive financial vehicle. I see a lot of people who aren't aware of the fees that they're paying. 1 to 2% extra in fees can make a big difference. I saw a chart, and it showed the time period between 1999 and 2010. And the cash flow rate, somebody was following the 4% rule during that period of time. It was obviously a volatile time in the market, but at the end of it, they were still in reasonable shape. A $1 million portfolio had become about a $700,000 portfolio. But when you added in just 1.5% extra in fees, they had less than half of that amount of money over a 10-year period. And so fees matter. You need to look at those. Now, we don't want to overcorrect. If we're doing something, slightly wrong or veering off course, we don't want to have a knee-jerk reaction. But without a plan, oftentimes that's what happens. Overcorrecting, I was taught in driver's ed, that's one of the most dangerous parts of driving. And the same in the financial world. People tend to overcorrect often, especially when it comes to money in the market. Things are going well. We're riding along. Things are on cruise control. We're not really paying attention. And then the market gives us a little hiccup. We see some volatility, something we don't like. And instead of kind of thinking it through, maybe riding it out, maybe making a slight alteration to get back on course, we go all the way in the other direction. I see it a lot where people take a big amount of money and they swing it all the way from being invested in the market, and then the market starts to decline and they take it and set it in cash all the way to the other side. Well, that may be overcorrecting. And likewise, if the market's going up and we look at it year after year and we say, gosh, we're missing out on all of the gains of the market, our money is sitting over here in cash, we may overcorrect and take that money and put it in the market, do the wrong thing at just the wrong time, and end up losing that money that we had sat in cash because we didn't want to lose any. These are the kind of things that having a plan in place can help us to address, can help you to identify where you've got opportunities, where you can control things that may improve your financial outcome. Again, your outcome, where you end up, is determined by the level of control you take over the variables that are outside of our control. So the market, taxation, inflation, interest rates, what's going on in DC, international conflicts, emergencies, those are things that we cannot control, but we can have a plan in place that helps us to identify the way that we are approaching those things. What is our plan to deal with them? How have we put in place protections? How have we put insulation in place to help us protect against that? If you're looking for generating retirement income, if you're looking for principal protection, if you're looking for growth for your assets, if you're looking to address risk, longevity risk, sequence of returns risk, market risk, income withdrawal rate risk, taxation, inflation, healthcare, if you want to know how much income you can generate in retirement, how much do you need to have saved for retirement? Are you saving enough right now? Are you ready to retire? These are all questions that are addressed through that optimized retirement plan, and love to help you put that together. Pick up the phone, give us a call. Rashawn Planning. You will talk with me. You will meet with me if we get to that stage. I am Peter Rashawn. I'm the founder, the CEO. I'm the chief wealth strategist for Rashawn Planning, and would love to help you get that plan in place, put that plan in motion so that you can feel better about these things that may consume the news media, but don't have to consume your thoughts. You can have a plan for how to deal with, address each and every one of these. 919-300-5886, 919-300-5886. Here's the big one. Well, another big one, but really the big one that I see most often is that people do not address the healthcare costs that they may have into and throughout retirement. Healthcare probably our largest potential expense in retirement, and yet very few people put in place any kind of protections against those expenses. There are several approaches to long-term care planning. There's Medicare, there's Medicaid, and those are there for us, but Medicaid in many forms and fashions is not the best plan. It is the last resort, the plan of last resort. We don't really want to become dependent on the government, nor do we want to put that dependency on our loved ones, on our family. The person that provides care most often, statistics show, is the daughter or the daughter-in-law. And a lot of people don't have a plan in place for, well, if I'm taking them, my family, out of their peak earning years, how am I going to compensate them for that time? Not only the care that they provide me, but that's time away from their own financial preparedness. So again, all of these things, these are items that we talk through. These are items that once addressed, you can feel more confident in your plan that, yeah, those things that are being talked about in the news media, they sound scary. They're beyond my control, and that's why I worry about them. But you personally have taken steps through having that optimized retirement plan to address each and every one of them and to feel more confident in your financial progress. And if that's what you would like, pick up the phone, give me a call at Rashawn Planning. Again, I am Peter Rashawn. You can also go online to richonplanning.com. Right on the front page, it'll pop up an offer, the availability for my book, Understanding Your Investment Options. Would love for you to get that. Would love to talk to you about any concerns that you have and help you structure that optimized retirement plan. 919-300-5886, the number to reach me, 919-300-5886. Thank you for tuning into the program. Look forward to speaking with you soon. Take care.
This has been Planning Matters Radio.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor. Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Advisory services offered through Brookstone Capital Management, a registered investment advisor.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.